Hello everyone, and welcome to this session, which for us is evening over here in the UK. I almost said the US, but I know most of you are joining us from other parts of the world, and in particular North America. So I know it's still the afternoon, but wherever you are from, you are more than welcome. And in this session, we are going to be looking at what's been going on in the market today, and obviously what is going to be coming up. We're going to be focusing on some stocks, the indices, and I think David's got some other bits and pieces as well that he will cover for you. But the main purpose of this session is to look at all these markets and instruments through the prism of volume price analysis and what the methodology is telling us about where the market is going, because ultimately that's what, as traders, we all want to know. But before we start, as usual, let me just pull up I think it's the right one. Yes, before we do anything, may I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business. So please don't ever use money that you can't afford to lose. I'm sorry, I'm just reading a message here from someone who's saying, I can't understand anything. It's all garbled. Could someone please put into the chat box whether you, excuse me, you can actually understand what I'm saying? Otherwise, we may have an issue with GoToWebinar and I will have to start the session again. If someone could actually type into the chat box, whether, can you hear me? Can you hear me? I know David can hear me. David, that's all good. Thank you. Thank you, Stephen. Working for you. Thank you, Neil. Patrick, I have no idea why I'm coming. I know I might sound garbled sometimes, but this time I think it's all coming through loud and clear. Would you like to check your audio settings on your computer? That's assuming you can understand me. I'm really sorry, Patrick. I hope you'll be able to resolve this as soon as possible. Okay. Just to reiterate, please, just take a moment to look at the disclaimer. As I said, it can be a very risky business, so please don't ever think of using money that you cannot afford to lose. Right. Let me just move that out of the way. Let me just reduce that. And what I want to start with very quickly is just a very quick roundup, because we are at a really interesting time for the markets. And I actually mean that sort of date-wise, because obviously it's month end tomorrow. It's quarter end, it's half year end, and all these factors together. Oh, and there's one other thing, sorry, we do have a holiday coming up obviously on Monday when it is the 4th of July. All these factors combining together do have an impact on what will happen, what happens in the markets. It comes primarily from the point of what's called rebalancing. And I'm not going to go into the ins and outs of rebalancing. If you want to understand a little bit more about it, I actually came across this article here, and you can, if you could take the title from it. Now, the guy who at JP Morgan who has come up with this this forecast that he sees US stocks going up 7% is a guy called Marko Kolanovic, and he is really well known. He's a bit of a contrarian. He'll make some pretty aggressive calls sometimes about the market. His track record, I think, speaks for himself. But it explains what we mean by rebalancing. These are fund managers with portfolios. Obviously, the market has done really badly. Up until this point, we've seen bounces and the market carry on lower, and we had a bounce last week as well, and it's really struggling to gain some traction and move higher. Well, we know why, because there's a laundry list of issues that we, not just the markets, that we're all having to deal with. That is the obviously inflation. We've got the conflict in Ukraine, and what is also happening now is that the fundamental data that's coming in, not just in the States but elsewhere, is really not coming in, very, very strongly. So yesterday, let's have a look just quickly on the thing, and the market is beginning to pay attention to releases that they would normally not, they don't really, I would say, take notice of. They kind of say, oh yeah, that's coming in, that's fine, and they kind of gloss over it. But yesterday we had one of them is the Richmond Manufacturing Index. Now that was supposed to come in at -4. It's coming at -19, which is terrible. This is really important. This is the consumer confidence, the conference board. 100 is the tipping point, if you like. That's the number. That's come in, worse. It's come in below 100. So that kind of causes, rattles a lot of nerves, as it were. Powell has spoken today. Now tomorrow we have a very important release, which is the PCE. Now this is the Fed's preferred metric for inflation. I know we have the CPI and we have all the other data, but this is the one that they like to use, and they really use this for their decisions about interest rates. And you've heard, what they've said, what they've done. We had a bigger than expected increase in the rates last time around. There's all this narrative about inflation, but there's also sentiment. There's also, what are people? How's obviously having an impact on you and I, basically, and now it's beginning to be reflected very strongly in the fundamental data, in the fundamental releases. Now, what that means is it actually puts more pressure on the Fed, because what they're trying to do is they're trying to achieve what's called a soft landing, which is deal with the inflation, but not in a way that is basically going to crash the whole economy, that we do, fall into a recession, depression, or even worse, next year we could get, stagflation, where they don't actually deal with the inflation and you don't get any growth either. So they're not really looking. It's a pretty tough time. Whether they're going to do it, we will have to wait and see. And then on Friday we have the ISM. Now this is all going on, that's all well and good, that's all going on, but at the same time we are at this point in the year where these other factors are coming together. As I said, we've got end of month, end of quarter, half year, and we have the holiday next week. And markets, particularly with the holiday, they like to end on a positive note. So despite everything, we may see a boost coming because of all those reasons, plus the rebalancing. Now, how that actually translates onto the charts is when you use volume on the charts, you will see, by virtue of the anomalies on the chart, you will see whether you are looking at fake moves, whether the moves are genuine. So what I'm trying to say is, if you're trading, if you're day trading, and all this stuff, and you've got the, you're aware of the macro situation and what is going on in the broader market, at the same time, you will see on the chart opportunities to buy, and you have to kind of take them, even though it may be completely contra to what is going on, because of this particular set of circumstances that we have at the moment. That's if you're not going to be in there for very long. As an investor, it's a pretty tough time, because if you don't use volume and you see, as I said, you see these nice moves higher, and you think, oh great, things are, the stock market is improving. Okay, I know things are not fantastic at the moment, but the buyers are, coming back into the market. Maybe it's time to buy, and that's even more crucial, that you use volume price analysis to make sure that you're not being suckered into, a stock, an ETF, an investment that is basically not going very far. And that's where volume price analysis really, really will help you nail your decisions. And what I'd like to do is I've got a couple of examples that I'd like to go through with you. One of them is a company called Fate, and it's Fate Therapeutics. And I'm actually writing a really long blog post about this particular company and this particular chart, because it has some just fantastic lessons with regard to VPA. It's also a stock in a category that that comes under the category of a fallen angel. We haven't made up this expression. It has been around, and it's one of the ones, one of the classifications that we've given the stocks in the program that David and I are currently putting together. David he's more involved with the sort of nitty-gritty of it at the moment, so he can talk a little bit more about, as I said, how we have classified the stocks within the stock market. But this particular one is really, really interesting, and I'd like to spend just a little bit of time just going through, because the lessons that you see here are you can replicate them on anything. You know, that's the beauty of volume price analysis. It's in any time frame and across all the markets. I have the as you can see here, I've got the ETFs, I've got the SPY, the Qs, and the DIO, which is the one for the Dow Jones. I've got some futures, but I'm going to leave David to look at the indices. I did do a post on the Qs, which is actually on Twitter. So if you follow me on Twitter, you will get my annotated charts. And basically, it was the weekly chart for the Qs. And we can see here, this was another classic case where this is what I'm saying. You have these down days. Then you have another down day stopping at a significant support or resistance. This is the support at 270. You have a tail to the bottom of the candle. The volume, it's not massive, it comes in, but it's enough to stop the fall. It's a bit of stopping volume, but it's the following, it's the subsequent candle which is important. Okay, this is the weekly chart, but it could be a 5-minute chart or it could be a daily chart. You have a nice up candle, and people coming in there will think, oh great, because if we look at the fall in the, you know, the movement in this in the indices, in the equities since January, it's been down, 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 you know, and then very weak rallies, you know, attempts to rally. Everyone says, oh great, this is the dip, let's buy the dip, let's go higher. But if you look at the volume underneath it, you know, as soon as I saw that candle, I said, you know, this is another fake. And in fact, with the volume underneath it, this is what we've had so far. But as I say, you do have to remember this particular context that we have at the moment. So what I actually said was, if all the factors play out, particularly the holiday one, markets want to, you know, end on a nice positive note. Where is this going to go? Well, support and resistance levels then tell you, they give you some projections of where the price action is likely to be heading, you know, hopefully supported by good volume. And really the key level for the Qs to the upside is 320. And this level we know is really important because it appears on the weekly and it also appears on the daily. Now that does seem a great long way to go, but it isn't actually that many points. But it's got, you know, it's got today, Thursday and Friday. So it's a bit quiet today because, as I said, it's the last day tomorrow, and you know this rebalancing is going to happen. So tomorrow should be a bit more lively from a price action perspective, and also we have the PCE as well. So to get back to Fate, actually before I start with Fate, where are we here? And also I've got Southwestern Energy as well. There's a couple of lessons on there as well. I'm just going to pass over to David, and I will just gather my notes for Fate, because it's quite a, as I said, it's quite a comprehensive analysis. I will be writing it up as well, and that will be going up on my my website later on this week. I'll pass over to you, David. Is that okay, darling? Yeah.
Hi, everybody. Anna says she can hear me, so hopefully you can as well, which is good. I was just looking across really all the markets. I've just got oil up here, August contract for oil. It is actually moving today, just to highlight where we are with the daily. That's the daily. I've had a recent rally, but selling off a bit today, well off the highs. Really nice intraday move on oil at the moment. We had a volatility candle here. This is on 1 minute. Same on 3 minute volatility candle. If it breaks below there, then it's going to carry on further lower. Confirming on the 15 minute, nice widespread candle, good volume under that one. Nice to see, followed by that, which looks pretty weak as well. But we're coming to the bottom here of the VPOC, so we could see a little bit of a bounce there. That's on oil. We all know where the gas prices are at the moment. They're pretty steep, 200p a litre here in the UK at the moment, or just under. What's interesting, let me just have a quick look. Currency futures, to have an update on that, see what's going on there. Euro's been under the cosh. In fact, let me pull over the trading view. Let me pull this over. This is on the VIX. This is what the VIX is doing today. It's not really going anywhere at the moment. It's still pretty high. It's up at 20, just over 28. These are the 4 currency indices that, whether you're on whatever markets you're trading, they give you an insight into sentiment. The top left, this is on 5 minute, this is on the pound. So we've seen some buying on the pound coming in the last few hours. This is the Japanese yen. So you're looking at straight sentiment here. This was where we were. Where were we this morning? This is where we closed off this morning, I think about 1 o'clock here, our time. At the time, it was looking like it was going to rally, but didn't actually rally until 3 o'clock, had some news out and it's rallied. And obviously that has reflected sentiment for the indices. So the yen rising is not great news. It's much more risk off than risk on with the yen currency at the moment. Now we've gone into congestion again. Down on the bottom left here, we've got the dollar. We had some decent dollar buying earlier on, but that's in congestion as well. This is the one that really catches the eye, the euro. We've had heavy selling on the euro pretty much throughout the rest of the afternoon. So the 6E, really nice trade on the 6E there. And a really, really solid, as you can see here, the trend monitor, literally from about 3 o'clock, more or less, when all the news came out. It's been pretty solid red all the way through the volume point of control and on down, and it continues lower despite what Lagarde may or may not do. And you can see that over here on the CSI as well. Everything else, this is the 6A, this is the pound, going sideways, not a huge direction there. Sorry, I beg your pardon, that's the Aussie dollar. 6p is the pound. Pound. Really nice trap move on the pound there. You can see it. It was absolutely as clear as day. In fact, this was a really nice move from 2 o'clock. Really nice price waterfall. Lots of volume coming in. Confirming all looks good. Then we start to see, indecision coming in, volume falling away a little bit, going into congestion. Then you start to see this rally, but the volume's falling away quite dramatically from this sort of peak of volume here. So this is trying to rally on falling volume, which is a real clear signal. This isn't going very far. And this is an absolute classic. It's a real 2-signal classic, if you like, where you've got, first of all, this comes in and gives you a clear perspective that whatever happens, this is not going to go very far at the moment on that sort of volume with it falling away like that so dramatically. And then you get this, and that is just an absolute clear signal, absolute clear, crystal clear signal. This is a trap move, the volatility is triggered, and down we come into another price waterfall. Not a huge volume under it, but this is all trap moves in here, and it's signaled really from here as an opportunity, and on we come back down to, we're going back down to the volume point of control again. So you can imagine the number of traders who would have got in here. And this is the power of volatility. And it doesn't matter, we're on a currency future here, this could be on a stock, it can be on a commodity, it really doesn't matter. The indicator works in exactly the same way. When you get volatility, when you get a reaction, when you get a market that moves suddenly very quickly, your gut reaction, your emotional response is to jump in and dive into the market, particularly if you've been sat there for a while. If you're a day trader and your business is about making money, you are sitting there to make money during the day. You're not sitting there for your health, and you're not sitting there for analysis. You are sitting there to actually trade and make money. So when you get one of these comes along, maybe you've been sitting there for half an hour, 40 minutes or whatever, and suddenly you get a snap move like that, the market snaps higher really quick. Your instant reaction is to jump in because you've been waiting, you may be a bit bored, and you want some price action, so you jump into it. The market makers understand that emotion totally. That is what they thrive on. It's how they make a lot of their money, because they understand the emotional reaction that speed of movement generates, that volatile move. When the price action just snaps higher or snaps lower, you want to jump in, bang, and you get trapped. You either get trapped in congestion or you get trapped in a reversal. And it was just a classic move, but it was also pre-signaled on, as I say, earlier on. Let's have a look at that one. That's moving sideways. That's the New Zealand dollar. This is CAD dollar. This is the inverse of dollar CAD because we're in the futures market. Again, not a lot going on there at the moment. Just hop over on to pick up a couple of the others. What's really interesting about soft commodities, given what is going on, you would expect soft commodities to be really roaring higher, given we've got roaring inflation, which is now getting up into double figures. And obviously a lot of inflation is driven through basic foodstuffs, basic raw materials, things of that nature. You would think that things like corn and wheat and soybean, which I've got here, would be absolutely, on a riding higher, really moving, but they are not. They've come off. And really this reinforces the point that you cannot just take a piece of news and think, oh, great, okay, we've got supply issues or whatever, we've got global conflicts, whatever it may be, fantastic. That must mean grain prices are going to be rising per se. So it's just a straightforward, bullish trade. It doesn't work like that. It's all down to the technicals. Yes, it is about supply and demand, of course, it is as well, particularly for soft commodities. But you've got to look at the technical picture and what the volume is telling you as well in terms of the futures markets. Let's have a quick look on gold. Dear old gold, which, despite what you might expect, gold has not been the beneficiary of all this inflation. Normally, I say normally, what is normal? But under normal conditions, you would expect gold to really be moving firmly higher, really strongly higher, and developing a very strong bullish trend. With that amount of inflation, you would think that investors will be putting their money into gold to protect them from inflation. The fact of the matter is it's not happening, and it hasn't happened. We had this spike here. Again, volatility trigger, reversal, big two-bar reversal there. The market has been around this level of 1800 for a long time now and cannot break out. So again, it's an interesting market. It is not, for whatever reason, and no one really understands why, gold is not benefiting from this soaring inflation that we're witnessing at the moment. So it's a curious anomaly. And there are other anomalies right now. I won't go into all of them, but there are others too. Can I pass back to you, darling? Let me pass back to Anna.